hide sometimes, so we have to do this like kind of portrait thing. Here you go. I don't know, where can I hang the dice up so you can see it there? Get you some dice action going. You get one of the dice. How about that? Okay, one of the dice. Get it over there a little bit so you can see it. Okay, one of the dice, and we're going to talk about in this video the top 10 things that you should be watching now that the Federal Reserve is going to go silent. And this is going to be a really important video for a lot of people out there to try and understand what it is that the Federal Reserve is doing with their monetary policy. It's very difficult to internalize a lot of this information because the mainstream media, hold on one second, let me just share the Wi-Fi. Oh God, it's a long stretch. Okay, I'm getting old. All right. Mainstream media doesn't really talk about how it is that the Federal Reserve is truly conducting their monetary policy. And to really understand it from the central banker's point of view is to look at the neutral interest rate and how close that is to the Fed funds rate. Now, elevated inflation and inflation expectation raises this neutral interest rate, and it gets closer to the Fed if the Fed doesn't move. And if the Fed doesn't move, the economy becomes less restricted. So now I know for a lot of people that just kind of made their head spin, but to think about elevated inflation expectation actually eases the economic conditions if the Federal Reserve doesn't move. Fed stays still, inflation rises, neutral interest rate rises, and the real interest rate will fall. Now again, this is kind of something called the Fisher effect. I've gone over it a million times on my channel. So when the Federal Reserve stops communicating, there's going to be indicators out there within the economy that we can follow to then have a better understanding of where it is that the Federal Reserve is going to be going with their monetary policy. Because again, everybody's like, when is the Fed going to cut? When is they going to cut? And I'm thinking it doesn't really matter if they cut or don't cut. If the neutral interest rate is rising and the real interest rate is falling, because if the real interest rate is falling, you're going to start seeing economic activity taking place, much like the surge in mortgage applications or refinancing. These are the things that are going to start taking place. Now, again, the Federal Reserve is going to go silent. Doesn't matter. We should stop listening to them anyway and start watching some of these things. And now the number one thing to watch is inflation expectations, period. End of story. That's the number one thing that everybody should be watching, is if the inflation expectations are going to rise or not. If everybody's feeling it, then the Federal Reserve is going to have to deal with the expectations being elevated, and it's exactly where they want to be. They can hold still and the economy becomes less restricted. If the inflation expectations fall, the economy becomes more restricted. Again, very crazy to think about it that way. But once you understand it from the Fisher effect, you go back and watch some of my videos, it starts making a lot more sense. So this inflation is essentially like the foundation of the credible threat theory, right? And when you see the inflation, what do you expect, right? Businesses expect the prices to rise, consumers expect the prices to rise. The companies start becoming in such a way that they start dealing with the economy in that fashion. And so all this expectation is essentially a self-fulfilling prophecy. The longer it stays within the economy, within the mindset, within the conversation, the better off the inflation outcome will be. Not better meaning that it goes away, meaning that it sticks around. Right? Remember, the Federal Reserve wants inflation. They want it elevated to ease economic conditions. I know, right? So that's the number one thing. The second thing is the credit growth. And now, what does that really mean? When the credit is like the economic fuel, like this is what's going to be driving all the consumption, the investment, all the stuff, right? And now, when you think about like people back in the day used to be a producer. And so if you produced more, that was really the stimulating effect or the activity that would be taking place within the economy. And now it's more about this credit growth or this credit expansion. And so now what do we see happening there? We will see bank lending. We'll see business loans. We're going to see mortgage activity. We're going to see credit spreads. These are the things that you're going to want to watch. If you're watching, for the credit growth, those are the departments where you want to look at, right? Bank lending, business loans, mortgage activity, and credit spreads. So this is going to be like a very good indicator of how much is actually taking place within the economy. If you see this expanding, it's most likely there's a lot of economic activity starting to happen. Right? So again, it's not just the expectations staying, persistent within the economy, but then also finding that going into the credit growth, which again, you start looking at mortgage applications rising, you start seeing business loans, you start seeing these things taking place. That's the credit growth happening. Business investments, right? Watching to see if the new factories start to come in. New factories, right? We're going to bring all these factories back to America. Could be a possibility. When things start to happen, you do see actual increase in new factories. We're seeing a lot of AI development right now, so I guess a lot of people could consider it in something like that. Capital expenditures, equipment purchases, hiring plans, like more the opportunity to bring in labor into the company. These are the things that you're going to look for business investment. These are the inflationary pressures that then start driving these outcomes. Right? Productivity. Right? Long-term wealth comes from producing more with the same amount of labor. And now that's something that is like economics 101. Like everybody has talked about this being like the thing that we need to be here in America is more productive, producing more with the same amount of effort or time or whatever. I find this one, although like very important within the list, I find it harder and harder to find evidence of this being a benefit to the people, but more of a benefit to the asset holder instead. Not saying that productivity couldn't happen, but where it comes from and where it goes, I think is now kind of sidestepping the average everyday person. Because you think about it, it's an AI adoption, and this is really like pretty much the people who develop the technology, use the technology, and own the technology, but doesn't really benefit the working average everyday person unless, the convenience of using that technology. Automation, manufacturing efficiency, energy production, when these things become more in line with the ability to increase the production, this again is inflationary pressures. And so watching out for these things. And I know a lot of times people will say, that the production within the United States needs to be focused in on the working class. That's not how this works. It goes towards profit, right? Whatever's the most profitable thing out there. So that leads me into 5, corporate profits, right? Often leading to employment. And that's really where I think a lot of times people get really upset with the idea that there's corporations profiting, like they're greedy corporations. And I'm like, where do you think the jobs really come from? Right? This is like they come from those greedy corporations. And when they profit, hiring usually is what follows. The more they make, the more they need to spend that money on investing back into the company, buying buildings, equipment, hiring people, right? These are the type of things that they end up doing. And so what happens when you go into corporate profits that increase and you end up increasing the hiring? Right? Wage growth. And this is another thing that's going to be inflationary pressures. So watch for corporate profits, and the longer they stay in there, eventually this leads into hiring. And again, the idea that there's going to be this wage growth from it, inflationary pressure. Now, that's kind of like old school thought since the flattening of the Phillips curve. That doesn't necessarily like come out in the economy in the same way. But the expectations of what those wage increases would do, I think would have somewhat of an effect on the economy in the sense of the self-fulfilling prophecy idea. Labor demand, right? Number 6, labor demand. So instead of only focusing on unemployment, which everybody has a tendency to do because that's like what the Federal Reserve looks at for their monetary policy, we really have to ask, are the employers desperate for workers? Right? That's the question that people should ask. Are the employers desperate for workers? Are job openings increasing and are wages accelerating? Now, I don't necessarily see all 3 of those lining up, but we don't really necessarily see the unemployment rising significantly. So when these indicators start to show up in a more like fashion of like in line with what you would expect in an inflationary environment, meaning that like the desperate for workers being, trying to figure out where it is that you can go for to find the employment, having to pay higher wages for them. Right? These are the type of things that are going to be good indicators of what it is that's happening with the inflationary scenario. And again, that's the labor demand. Government incentives. Now, those who follow me on my channel for any length of time have really not heard me talk a lot about politics, but there is, politics that are involved within the Federal Reserve's view of inflation and inflation expectations. And now when we think about like at least for me, the number one like political action that has taken place right now, or at least in the recent one, besides like the war, was tariffs. Tariffs were so impactful on the people's expectations. It was just unreal. Everybody knew that the tariffs were illegal, that the Supreme Court was going to vote them down, but yet everybody incorporated it into their business models. Did not give it 1 second thought about protesting against it and just accepted the fact that it was happening without any hesitation. It worked so well. It was one of the best credible threats in the entire, like, I think it worked way better than any credible threat that they have ever done. Because, like, they left it up to the Supreme Court, which was just like, oh, yeah, we're just going to string this sucker out for a while, right? So, in that sense, when you look at it in that way, yeah, it's pretty political. Tariffs are obvious when it comes to that. The other big one for people are tax changes, right? When the tax changes come about, everybody's all lighting up about those constantly. The other one that goes with that, deregulations, right? Now, those three are probably the most important ones when it comes to like the government incentive programs or just being part of the whole view of inflation. That's the one that most people are going to end up focusing in on, are those tariffs, tax changes, and regulations or deregulations, however you want to look at it. But you also have to kind of look at infrastructure spending and then the energy policies that go with it. So if you're going to include all the politics or the political environment or the government, kind of aspect to it, the government incentive focus on where the inflation is going to be, that's what I would focus in on. Tariffs, tax changes, or things like tariffs. So it doesn't necessarily have to be tariffs. It can be things similar to tariffs. But tax changes, deregulations, those are probably like the big three, And then after that, like infrastructure spending and energy policies. War nowadays is probably the one that everybody is just like ignoring everything else and then focusing in on that. And when I think about like what it is that people had anticipated for war or what war would be like, I didn't like I come from a military family, and when I listen to people and watch the news on it, I thought to myself, man, this doesn't seem as warlike as what I remember, like Desert Storm or something like that. These events were just conducted in such a different way, and it seemed more like a manipulation tactic. And I don't want to be like conspiratorial or accusatory or trying to even come up with a debating argument or anything like that. I'm not, like, everybody has their own opinions and thoughts and everything else. At the end of the day, I kind of push back against all the information that is done out there, and I ask myself, did it raise or lower the inflation expectation? Because that's the important part to me. All right. Like, I can't stop people from bombing other people. Like, I just go shooting at each other. I can't stop that from happening. But I can interpret what it is that I'm seeing out there for my own view on how it is that I need to position myself. And part of that is watching to see if there's an inflation and inflation expectation that is elevated because of it. So, again, government incentives, definitely a way to see if the inflation expectation is going to be there. The big one, right? In my opinion, this is a big one. Number 8, consumer confidence, right? And now this is so hard for a lot of people to internalize because the consumer confidence for 80% of the people is in the toilet. 20% of the people, it's kicking ass. So unless you're talking to the right 20%, you're most likely looking at consumer confidence that is absolutely in the toilet. But at the same time, you're not really talking to the consumer. So what do you have to look at to see what it is that's taking place within the economy that's going to show more consumer confidence in like that broader economy, not just in the top 20%, but in the idea that there is more confidence happening within the general view of the people's perception, right? Because again, the it doesn't really matter if they're not confident, right? The consumer's at the top 20%. But what will you see happening? You're going to see more buying of cars, more remodeling of homes, more traveling. They're going to be spending more in general, right? And now, when I think about how to focus in on that when it comes to the average everyday person, it's not going to be evident in that, right? Because the average everyday person doesn't really spend their money in that way in an increased consuming fashion. That's left up to the 20%. So if we're going to see an inflationary pressure that comes from consumer confidence, you're really going to have to watch for the economic activity happening as opposed to the comments that are being made out there or the indexes that are showing out there, because all those are going to be very disingenuous to where it is that the consumer is actually at. All right. So again, cars, remodels, traveling. This is the consumer confidence increasing. And again, it's most likely the top. Right? Um, can't talk about inflation without talking about energy. Energy is going to be one of the biggest things that people are going to look at and probably should be looking at for the inflationary pressures that can come. Now, what do you look at? I don't know. I generally just kind of look at oil. Like oil is kind of like where everything kind of goes from. But there's natural gas, electricity, and probably the more important one to look at regularly if you're going to like any kind of energy out there is shipping. Because it doesn't really matter how much it costs. How much does it cost to get it? Right? See, this is something that we learned in Cantillon essay on economic theory, is that even if you are producing something at a higher cost than say the neighbors are or the competition is out there, if you can distribute that stuff cheaper than anybody else can, you're going to be able to have the best product for sale because it's cheaper than anybody else can ship it for. So again, even if it's a higher priced, like the input cost going into it was higher, if you can distribute it cheaper than anybody else can, then most likely it doesn't even matter if they build it cheaper. If you can get it to the hands of the people who want it, that's the important part. So shipping costs is an important one to watch for the inflationary pressure. So again, it's not just oil or natural gas, which are obvious ones, like I kind of tendency to look at those, and electricity, but shipping as well. And shipping is very important to that. Now, the 10, number 10, the big one, right? Like the inflation expectation is number one for everything, but the big one that is going to be the indicator of all indicators, the top 10, number one, like, well, number one was the expectations, but top 10 big one, right? Financial conditions. This one, you have to understand the bond market. That's all there really is to it. You have to understand bond yields, how the price of bonds move, how yields work inversely to bonds, what even like to the point of what the primary dealers are. If you have no idea about the financial market, then you're not going to have any idea about the financial conditions. It's just going to be almost impossible. So the financial conditions include not just the bond market, they like the credit availability out there. How easy is it to access this credit? How fast is it people are willing to give up money in order to get that return? And if the interest rates are lower, that's people eager to give out money. The higher the interest rates, the less eager they are to give out money. So this is a financial condition that is a very good indicator is how available that credit is and where the yields are. All right? Stock prices will be a result of this. Mortgage rates, the dollar index, like a lot of times people are like, oh man, the dollar is on its way out. And I'm like, no, if you go and look at the dollar index right now, it's about as high as it's been throughout history. In fact, there's most of the time it's less than where it is now. So the dollar index is a very important thing to kind of look at for financial conditions, like where it is comparatively to other nations out there. And then, of course, the lending standards. Are they tightening or easing these lending standards? And what I find very interesting about this one is that when you find the conditions within the economy are getting questionable, like it's coming to the end, it's about ready to pop, you start seeing the reduction in lending standards. Like you don't have to have as much qualifications in order to get the loan. And that's scary. Like they reduce the restrictiveness. And that's actually kind of a bad sign. And it was something that Michael Barr had just recently given a speech on, talking about that very thing and how that's taken place within the banking regulation systems right now. Like they're kind of like bringing on new regulations for the banks where they don't have to carry as much capital. And now by not carrying as much capital, it makes the financial system more compromised without like an insurance policy. The more capital you have on hand, the bigger your insurance policy is. And so again, like reducing these standards or these requirements is another early sign of like deterioration within the market. But it can also be a sign of the financial conditions on whether or not they're easing or tightening. Okay. So this is kind of important to look at. It's a little harder because if you're not like deep into the banking, how the banking operations work, then that's pretty difficult to like, just kind of go and look at. You have to kind of already be following it to kind of understand what's happening there. But again, the other ones are a little easier to follow. Bond yields, credit availability, stock prices, mortgage rates. These are things that people can really understand, if you are even somewhat interested in it. The dollar index, a little bit more complicated, but again, it's not that difficult. Lending standards, this is where it starts getting a little bit harder, and you really have to dive deep into the understanding of the Federal Reserve in order to get it. So that's the top 10, right? These things, like 22 minutes into this video, go back and watch the list again if you need to. Maybe I'll make a list of it and I'll put it down in the description or something like that. But these are the list of things that you're going to need to follow in order to follow the inflationary expectations, or what's going to end up happening within that, within the idea of how it is that the Federal Reserve is viewing their monetary policy. The more you familiarize yourself with those things, you're more likely you're going to be able to kind of view the Federal Reserve and how it is they are going to position that Fed funds rate. Because they're not going to explain any of this to you. But if the Federal Reserve sits still and the neutral interest rate moves because of the financial conditions that are taking place, that will be obvious in the list of 10 things that I have brought up here, you're going to be able to see whether or not the economy is going to become restricted or not, or accommodating. It doesn't matter, it really doesn't matter which way. I mean, it matters to you and your position, but it doesn't really matter at the end of the day what it is that the Federal Reserve is doing. We have to think about what it is that's happening with that real interest rate environment. And that esoteric information is not delivered anywhere on the mainstream media, and very few people talk about it. I'm going to bring it up regularly on this channel because those who are following this channel now see it. They see that clearly. They knew the credible threat theory, and then when Warsh came out saying that he's going to end forward guidance, the dot plot, and everything that he's talking about, everybody within the viewership of the Uneducated Economist are hearing clearly what it is that he is removing and know exactly what it is that they need to look for in order to understand monetary policy. And ultimately, the speaking of the Federal Reserve, we don't need that anymore. We don't need their crap on, the mainstream media and all that information that they were supposedly delivering to their audience. That wasn't important information anyway. We weren't focused in on that. We were focused in on their speeches, and we were focused in on inflation expectations. Every time somebody says, oh man, what do you think this war is going to, oil going to do, energy going to do, whatever, I would say, please tell me. What do you think it's going to do for your inflation expectations? Right? Because that's where I was focused. Listening to the expectations of the people, watching the Fed. It was like, you guys moving? No? Got it. What's your expectations? Got it. I know what I'm going to expect. Easing financial conditions because they're standing still and that expectation is rising. And if you know what the effect is, that's going to ease the economy or at least make it less restricted. All right. It's almost impossible to lose money long term in the stock markets. Yeah, I guess it kind of really is. QE. QE is an operation that takes place at the lower bound of zero. That's not something that they really do when they have elevated interest rates. Now, I know a lot of people are going to try and convince you that they're doing QE, but that's not really what's going on right now because everything that they are buying as far as their liquidity injections go is short-term bonds, meaning that like everything that they are doing right now will be unwound within a year. So all the liquidity injections, all the bonds that they are buying, when those things come due, that's money coming back to the Federal Reserve. And unless they roll that back over into a new debt, then it's money coming back out of the economy. So that liquidity injection, that short-term buying or the buying of short-term treasuries to add liquidity to the banking system that everybody said was a crisis scenario was really making sure that the banking system was provided with plenty of liquidity in that short-term sense. Again, everything that they have done would be unwound within a year. And unless they just roll that over, which they very well could, I mean, it could be just, that way forever. But that's not the same as quantitative easing, which buys treasuries to a certain extent farther out on the maturity yield. And that's an operation that takes place at the lower bound of zero. That's not something that takes place with elevated interest rates. All right. The biggest thing the news isn't saying is the Fed's moving their target from 2 to 2.9. They're moving it to 2.9? When did they say that? When did that happen? I missed that one. I'm sorry. I listened to a lot of the Fed. I missed that one, man. I mean, I didn't realize that took place because I don't think it really did it? All right. Government keeps. That's it? Government keeps? Blue liner. Yesterday. The government is kind of print. Huh. Anybody got any good questions or anything? Not saying that, I appreciate all the comments. All right. People around the Fed want it. It's not official notes. It's not official notes about the 2.9. Is it in the official notes? It's because Warsh said he is looking at the number to the left of the decimal point so he can be closer to 3, i.e. 2.9 is still be fine. Okay. I mean, these are all assumptions, right? I haven't seen any document that says that. So that's assumption so far. Warsh has awesome hair. It's pretty impressive. I was thinking I could run for president, but then, if Kamala goes, I don't have really a chance. And if, JD Vance, like, maybe I could go up, I could compare to but even that it's pretty impressive. I don't know. I don't know if I have enough Aquanet to really get there, All right. Who has better hair, Walsh or Trump? Oh, you can't compare to Trump. Oh, come on. That's like on a whole other level, I mean, all right. What's your advice for silver? Use it as an insurance policy. That's my advice. Warsh has been around the administration and historically wanted low rates. Warsh has yet to have any stance published in official minutes or speeches about the 2.9. Okay, that's what I thought. All right. And you got to think, his view of low interest rates is not today's view. That was a view from a while ago. And although he might have mentioned something in the last few months or weeks that might have given that idea of it, but when it comes to the FOMC, it doesn't really matter what he thinks alone. The FOMC votes on it. I got long hair, let's permit and I'll run. Dude, I think you, I think, dude, you would look awesome with the curls, bro. All right. Uh, MRK says hi. Let me cruise back up here a little ways. It's about time for and to be double the gold double market crash. Huh. All right. During economic crisis or severe market dysfunction, the Fed engages in large-scale asset purchases of treasuries or mortgage-backed securities, MBSs, or to lower long-term interest rates and pump liquidity. Yeah, that sounds like an AI response. Is that what? Simon, if there is a discussion on official FOMC, you tend to talk about it before I saw on internal messages when I worked at the New York Fed. Thank you again. Hey, is that statistic 4009? Are you the same? No, you worked at the New York Fed. I talked to somebody at the Fed. Well, thank you, bro. I appreciate that, man. Like, I really do, because it seems that by sitting, it really feels like I've read so many of their documents and speeches from the individual members of the FOMC that I really feel like I have been sitting in the room with them. Like, you get to know somebody, right? You get to just know them. You know who they are. You know if they're the joker. You know if they're serious. You just know who they are, and you kind of get to know their tendencies and what it is that they're thinking and feeling. And so when that happens and I start to see clues of it taking place and I come out and I'm describing what it is that I'm seeing out there, is because I recognize the behavior that's happening within these people's, within the FOMC, within the individual members. Like, again, the idea that you can actually like name off the different members of the FOMC, like that, like, I can't think of, like, I mean, I know more members of the FOMC than I know professional sports players right now. And that's like seriously, I'm going up to watch the Red Sox play this week, and I can tell you a couple of the players, out there. I just don't follow it anymore. The only thing I really follow is the monetary policy in the FOMC and economic forces that are taking place. We'll see, same person. Okay, cool. Yeah, it was a year ago I worked there, but I was following you and found you had better insight than what was in the internal messages to non-board members during IT work. Yeah, thank you. I remember talking to you. I can you can name two members of the FOMC. Oh, come on, you know more than two. I mean, think about it. Just think about the popular ones. Nah. You got Warsh and you got Powell. Those are two. Those are easy enough. You got Lisa Cook. She's, wants, got to fire Lisa Cook. She's the only one who wants to lower rates, by the way. That's what I think is funny. And it cost her $1 million in legal defenses, which is going to be reimbursed when the Supreme Court finds her, like, not guilty of anything. Then all that money has to be reimbursed. And I just wonder, is there an interest payment that's due on top of that for the lack of being able to use that funds for your own purpose? I mean, I don't know. It just kind of makes me wonder about the ethics committee and what it is that they are actually doing. So, think about it. You got, or just name the women first, right? You got Bowman, right? Michelle Bowman, Lisa Cook, Loretta Logan. I'm sorry, Loretta Logan. Lori Logan, Anna Paulson, Beth Hammock. If I say her last name right, I always want to call her Hammock, and I always say her name wrong. But those women, right? So those are the five women. That's easy enough. I mean, maybe not Anna Paulson. You hardly ever hear anything from her, or Beth Hammock. But Lori Logan's fairly popular. I mean, she has some speeches out there that we've read. Bowman's all over the place. Lisa Cook is just like, yeah, everybody knows Lisa Cook now because they want her fired. So, those ones are fairly easy. And then you got the popular ones over at the Fed, or the men on the group, the males. You got Powell and Warsh, they're the two big popular ones. John Williams, because I won't ever shut up about him. He's the New York Fed president. You got Michael Barr, Christopher Waller, uh, Neil Kashkari. Who am I missing? You know, God, who is it that I'm missing? Oh, Philip Jefferson. Ah, yeah, Philip Jefferson, the one with on communications, right? So, once you get these guys, once you've read their speeches and learn who they are, it's just like you kind of just know what the FOMC's up to. You just read enough of their speeches and heard them. Bill Hicks, thank you so much for that super chat, man. Can I heart that then? Yes, I can. Thank you so much. Simon, thank you for all you do. I am positioning myself as best I can, assets investing and working long hours to make that money work for me. Well, good for you, man. Once you have taken ownership for yourself of it, right? Once you stop blaming the external, see, this is really something that I've started to become more aware of as the issues start to come up in my life that I find that used to really trigger me are really more tests if I'm ready to move on to the next stage in my life. And now as I get these tests thrown at me regularly, I'm starting to become more aware of how it is that I am reacting to these things. And now a lot of that has to do with how I'm positioning myself with the money. Like I bring it up. I don't want to talk too much about it because again, I just don't, I'm not trying to avoid it. It's just not something I'm trying to bring up. But I had taken on some debt just recently. And now it's kind of concerning me that I'm like, man, I'm missing out on these opportunities to position myself in all these other things. And I start to like manifest that almost into existence, right, in a way. Not realizing that this is the lesson that I need to learn, right? In order to do the things that I want to do, I have to be able to handle not only these type of events that come so that I can continue on doing the things that I want to do, but if I'm not conditioned in a way that I can handle it, I need to develop the skills to do that. And the only way to do that is by getting hit by these things that essentially is going to build up the strength through resistance. So if I want to have certain things in my life, there's certain like almost like certain punishments that I need to endure in order to create the skills and the position to deal with the fact that I want to be at this other level. Like I can't be there if I have these other issues that are going to happen. So once you have learned how to deal with these smaller issues, then you can move on to the next one. And now that's what I'm learning is that as I find these things that are like, man, you're getting beaten down, right? Like every time you try to step up, there's something else that knocks you down. It's like, that's not what's happening. What it is, it's like the universe preparing you for the next step. But if you're not ready to handle these situations, how can you possibly handle one of a magnitude of greater than what you're experiencing now? Like you can't. Like if you can't handle this situation, how could you possibly handle the next one? So that's why you're getting punished. It's not because it's punishment. It's because you're trying. It's like the universe has to level you up through beating you down. It doesn't work. Like they can't just like, oh, here's a rosy path that you can take with no problems ever. And don't worry, you'll know exactly what to do when the problems do arise because you're just going to magically know how to deal with it from the skill sets that you never learned. It doesn't work like that. Right? All right, chasing excellence is a great way of life. It really is. Thank you again, Bill Hicks. I really appreciate the support for the channel, the super chat, and all the comments, all the thumbs happening here. We got 73 people watching right now with 35 likes. Thank you so much for hitting that like button. We got any more comments, questions, anything else we want to add? Chasing excellence is a great way of life. It really is. 3, Michelle Bowman forgot Powell. Yeah. See, that's what it's like. That's why I know owning your own economy for yourself is going to give you the best opportunity. See, here's the thing. Everybody else wants to tell you what the problem is and why it is that you're failing. But you have to understand there's people out there who are succeeding. So when you have somebody out there who is telling you why you are failing, they're giving you excuses to why you are failing, and then ultimately giving you permission to not overcome those failures. Oh, the Fed's fault. If they hadn't done it, you'd be all right. Yeah, it's the Fed's fault. It's the government's fault. It's all these other people's faults. Well, do you realize that's the universe trying to give you the resistance that you would need in order to level up to do what it is that some of these other people are doing? That punishment that you are literally getting is the universe sending you the resistance that you need in order to level up. If you can beat that, then you can then be rewarded with the next step, right? Always building lumber is always in demand. Yeah? As a techie, I am watching government and private investments into the AI bubble and the people that are benefiting. I am really not killing this setup of the taxpayer to ban AI companies soon. Yeah. This guy is pretty darn educated. Well, thank you, Larch. Is that Larch? Is that what it says? Yeah, thank you, Larch. I really appreciate that. And really, I'm not educated. I've educated myself, but really it was the audience that educated me. And that's really where this Uneducated Economist channel came from, is that we didn't really pick this up from any kind of institutional understanding, theory based, from some past view or something like that. This was literally picked up by piece over time without any real direction or intent or expectations from it. I didn't use this channel to try and become an investor, although I have done investment, although there are plenty of investors. I use this channel to try and get a better understanding of economics. The people who were here helped me develop a better understanding of economics. If it wasn't for the audience, I never would have learned the stuff that I learned. It was the audience who kept asking, what about this? What about that? Well, how come this going on? What about that argument? And I would have to research and think about answers to all these questions that people would have regularly. Every single day I would find them and I would research and think about it and then come up and formulate an idea and key points and then come out here and deliver it. And it happened so often, regularly, that now I can just fire off the answers to just about all kinds of questions out there. Just simply like, earlier with the silver question. I don't mean to just blow it off, but that's seriously what I would think about it as, is an insurance policy away from the third party risk with no intentions on making money with it. The moment that you try to make money with it, the outcome really starts to get very uncomfortable and difficult and accusatory and all kinds of stuff. And instead, I'm just thinking, man, wouldn't it just be better to figure out how many ounces you have as opposed to how much it's going to be worth? Because if I could stack those ounces, then I know I'm separating myself from the third party risk. Because if that falls apart, silver doesn't. But if it stays together, there's all kinds of return on investment, opportunity, and compounding, and all this stuff outside of that. Silver just sits there like a dumb asset, because that's exactly what it is. It's not dumb for buying it, but it doesn't have any kind of return. It doesn't pay you rent. It doesn't have dividend. It doesn't do anything. All right. Now, it does have speculation to it, and it does have a usefulness to it. But outside of those two things, it doesn't have the same investment quality that an investment does. It's a speculation. And once you separate the two, it becomes a lot easier to understand it, or at least, use it for what I feel is a better intended purpose. Simon, the majority of the tech companies are buying each other up and operating overall as a loss for years. West Coast VC culture is selling stories, hope about tech, not delivering. I'm going to, this is something interesting right here, because that's actually something that you would see in a somewhat of a booming economy, right? Or at least that booming industry. I want to get back to the other questions you have here, but to kind of understand, if you were an investor Think about like this. If you're an investor who has an idea about like a particular industry, like say example of this, and there's five major companies that are like the front runners to this particular industry that you want to invest in. Now, there's only enough room for three of them. Right? Actually, there's really only enough room for two of them, but there's going to be three. One of them is going to kick ass, the other one's going to do okay, and the other one's probably going to break even. The other two are going to fail. So when you think about it in this fashion, like there's only enough room for, really three of them, two of them, really one of them's going to kick ass, but three of them are going to be there. But you don't know which one. You don't know which one of these five are going to do that. So you have to invest in all five, knowing damn well that two of them are zombie corporations. They are not going to make it. There's not enough room for them to make it. It's a malinvestment to begin with. There's zero doubt. But if you are investing in five of them and two of them fail, but three of them make it, then you still win at the end of the day. So you're going to find malinvestment taking place during times like this, because that's ultimately how it ends up working, because the investor doesn't know, right? They're gonna shoot for it. All right, my question will have, will laws on monopoly need to make a comeback actually be enforced for helping the economy make a proper comeback in corporate America? Monopoly laws, well, I could imagine some of them would probably take place, but the idea of using like stablecoin digital currencies, I can only assume that we're going to start finding some sort of like UBI kind of payment going into it. And the ideas of monopolies will be less of a concern, as the people will have have what it is that they need in order to make their necessities. When that's the case, people have a tendency to kind of ignore the problems that are taking place within, corporate greed and all that. So it's almost like a buyout, like a sign, hush money. And so will it happen? I would imagine there will be some, but again, if you appease the people, then there will be less of a worry. What's your thinking on the oops? What's your thinking on the bankrupt fiat American petrodollar? It's taxed at 70%. In the end of all of it, you take in 30% with a pipe dream like Social Security. Will it fail in the next 20 years? I don't know if it's gonna fail in the next 20 years. And as far as like, I mean, there was a lot of people who would have said like the dollar would have died by now. If you would have asked me like say 20 years ago if the dollar was going to make it this long, I would have said no. I would have said it would have ended like years ago. And so I had to really change the way that I was viewing what it was that was taking place with monetary policy, the dollar itself, the global world reserve currency, and then how it is that the demand for this currency still exists, even though the people of the world hate it. But yet here it is in higher demand now than ever. I mean, if you don't believe it, just look at U.S. Treasury issuance and the foreign holdings of it. There's more foreign holdings of U.S. Treasuries now than ever. And so it's not like they're trying to get out of it. It's the only currency of use. Like you can't really use, like you could use whatever you want, it doesn't matter. But if you're going to be doing transactions to the amount that the United States dollar is doing, then you have to be able to provide the world with that much currency. And there's no other country out there that's willing to do it. And so even if they're like, people are like, well, we're going to start doing our own deals and our own oil and our own dollars and that's it. It would be like, that's fine. You can do whatever you want. But at the end of the day, people are going to want to eat. They're going to want to do transactions. And there's not enough of those other currencies out there to perform all the transactions that are in demand. So could you use all these competitive currencies? Absolutely you could. And could all of them combined do all the transactions? Well, yeah, sure, I guess. But you're not going to find that kind of environment when you have all these different types of currencies attempting to try and do all these different transactions all over the place. And although they are trying to build the rails through stable coins and the digital currencies or whatever, cryptocurrencies, to try and make that sort of system capable, it's not going to take place, right? It's not going to take place because there's going to be one currency that people are going to want to use because they're not going to trust anything else. They might, like a couple of people might trust it, but you're going to want to take a currency that somebody else is guaranteed to take. And now, if you know that you're going to get this currency and give it to that person, okay, no problem. But if you're going to take a currency and then wonder who it is that was going to take it, that's a problem. The dollar plays the most significant role out of all of them out there to perform those transactions, because it doesn't matter who you are, you'll take dollars. Even Russia owns U.S. Treasury debt, right? And they're like, they're like the biggest enemy right now, besides Iran. All these nations do deals in dollars. It's because there's no other currency out there in significant quantity to perform the transactions that everybody would use and trust. That's so, like, even if they don't do the deals in oil, they're still going to have to use something that everybody wants. And that's where, like, I think really the stable coins are coming in to pretty much tokenize everything. And at that point, who knows what it's going to look like. I heard them say the same thing, like 2.9 was the target all along. No way. There ain't no target. They can't target anything. They've never targeted. They want to be elevated above the 2% target. All right? So their target is above target. The thing is that if you had followed my channel for any length of time, that would not be a real thing. We knew the entire time that the idea was to have persistently high inflation. It was never to be at 2.9. It wasn't to be at 3.2. It wasn't to be any of that stuff. They can't target anything. All right? They can't target inflation. It's not a real thing. They can pretend to do it. They can convince people they'll do it. All right? But that's not something that they're actually achieving. Is a target. That's not a real thing. Now, to understand that if you have elevated inflation and inflation expectations, regardless if it's at 2.9 or 3.2, it's going to move the neutral interest rate. Because inflation was running persistently under that 2% target. So the moment that you start raising inflation and inflation expectation, you'll start moving the neutral interest rate. This is the important part. When they said that inflation had gotten away from them, that was like to their absolute benefit in a way unlike anything that they had hoped for. So much so they were like, whoops, sorry about that housing market, people. You really got a boost out of that, didn't you? We're going to have to take a little bit out of that. And we won't take too much, no worries. To see how this happens is like, I mean, it was almost to the point that I was just like, no way were you guys able to pull this off like that. Like at the end of 2019, they're talking about how it is that they were going to push inflation, push it higher, get all this inflation out there. And I'm like, you guys are nuts. The Federal Reserve is absolutely nuts. They're not going to be able to get inflation. They haven't been able to get it this whole time. 10 years of quantitative easing, zero interest rate policy, ever increasing amounts of inflation expectations, failing to produce an inflation. It didn't work. They ran consistently under the 2% target. They ran between 1.8 and 2, but never really staying at 2. They pass it by, like, whoop, there goes 2. And then when it came to COVID, they literally had a make-up strategy to make up for the fact that they failed to achieve that 2% target, even though they had done all this massive quantitative easing. The expansion of the money supply failed to produce an inflationary scenario. And that's what's crazy about it is that they expanded the money supply by 4 times, greater than 4 times. It was 5 times. Right? Took the balance sheet of $850 billion to over $4.5 trillion as a quadrupling of the money supply. Right? COVID, it was a doubling. On a percentage basis, there was way more inflation taking place during the Great Financial Crisis than took place during COVID. And it failed to produce inflation. Failed miserably. So much so that they actually created the makeup strategy. Like, you know who really said it best was actually Powell. Let me see if I can bring up his speech here real quick. August of 2019, or I'm 2020. Where is that thing? Yeah. The decline in the assessment of the neutral Fed funds rate has a profound implication for monetary policy, with interest rates generally running closer to their effective lower bound even in good times. The Fed has less scope to support the economy during an economic downturn by simply cutting the Fed funds rate. The result can be worse economic outcomes in terms of both employment and price stability, with the cost of such outcomes likely falling hardest on the ones least able to bear them. Running at the lower bound of zero was a major problem for him. Says here, the muted responsiveness of inflation to the labor market tightness, which we refer to as the flattening of the Phillips curve, is also contributed to low inflation outcomes. Now, those who remember from the end of the Obama administration all the way through the first Trump administration, there was historically low unemployment that failed to produce an inflationary scenario. That's it right there. That's what Powell is talking about in this speech. The muted responsiveness of inflation, right? The lack of inflation to the labor market tightness. Even though we had this tight labor market, there was this muted responsiveness to the inflation, which we refer to as the flattening of the Phillips curve, also contributed to low inflation outcomes. In addition, long-term inflation expectations, which we have long seen as important driver of actual inflation, and global disinflationary pressures may have been holding down inflation more than was generally anticipated. Other advanced economies have also struggled to achieve their inflation goals in recent decades. Sounds like they were having a problem with inflation. The lack of it. The lack of inflation. They were like, oh no, we're stuck at the lower bound of zero because we can't find inflation to pull us off the lower bound of zero. This is a problem. Less scope of operation when we're at the lower bound of zero. This is all Powell talking about it before it happened. Remember, this is August of 2020, before the inflation, before it happened. The persistent undershoot of inflation from our 2% long-run objective is a cause for concern. Many find it counterintuitive the Fed would want to push up inflation. Many find it counterintuitive. Some people don't even believe you can do it. Right? All the money printing didn't do it. What do you have planned, Jerome? What do you have planned? Because if you did all this money printing, expansion of the balance sheet, 850 billion to 4.5 trillion, failing to produce an inflationary scenario, you're stuck at the lower bound of zero, no scope of operation, cause for concern here, right? Many find it counterintuitive that the Fed would want to push up inflation. Yeah, they sure would. Says, after all, low and stable inflation is essential for a well-functioning economy, and we're certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and incomes. Not like you didn't know. It's not like he didn't warn you. However, inflation that is persistently too low, can pose serious risks to the economy. Serious risks. Inflation that runs below its desired level can lead to unwelcome fall in long-term inflation expectations, which in turn can pull actual inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. Does it sound like they had a problem with too high inflation? Or does it sound like their problem was too low? I mean, he was just like, man, we're stuck at this lower bound of zero with no real scope of operations. All right, my favorite chart for watching the actual bank-to-bank loans in the volumes. Our IRL data is way overdue. Oh, what's that one up there? Oh, it's deplorable. I actually think it's a good idea to use real-time data like they were talking about. Hopefully they get rid of the calling people to see how much they would rent their house out for. Can you repeat the 10 things to watch? Um, yeah, I'll repeat it. Hold on. I got it listed over here so I can go through it. Hold on. You learn from the school of hard knocks and Fed Reserve notes. Yeah. We call it the school of hard knocks. Yeah, but you also have to understand like why it's happening. Like, that whole punishment thing, when you feel like you're being punished, you have to think, what is it that I'm being set up to then achieve? Because once I get through this, like whatever it is, like you might have some serious high goals. And with that is going to come some serious issues. Right? Like, somebody says, oh man, I want the awesomeness of having all these millions of dollars, but I don't want a single headache that might go with it. Okay. Like you want to win the lottery or something. Most people who win the lottery suffer. So, like, you have to be kind of careful on how it is that you want to get this level of excellence that you're attempting to achieve. If your level of excellence that you're attempting to achieve is massive, then you might have to kind of expect that you're going to get a massive punishment in order to condition you to achieve such level. And, that may not be exactly what anybody wants to hear, but, almost like anything else out there, you have to meet the resistance in order to build it, to build the strength of it. Like, you can't possibly get strong not lifting weights. Like, I guess you can artificially attempt to do it, but then it comes with those, the issues that fall from that. So it's just to understand the resistance is like the sign of like the next step to achievement. Once you get through this resistance, you will have what, Simon, the reverse repo has been depleted. Do you see something like that happening and or only when people are holding bonds and they rapidly change rates? Something like the repo facility firing back up or being depleted. Like I really think about how it is that liquidity injections are done. And for the most part, I think a lot of times people have a tendency to kind of misunderstand what it is that the Federal Reserve is doing at the time. Like the repo facility is the facility that they had at the time in order to make it happen. When the liquidity disappeared back in September of 2019 due to a major corporate tax payment, and took a bunch of cash away from the big banks, sent it over to the Treasury General account, that deprived the banks of being able to meet their reserve requirements. Now, back in the day, they actually had like a limited reserve system in which that the overnight lending rate was found by the reserve requirement levels that the banks had, and the ones who were in need of reserves to meet that overnight or to meet the next day's to open up for the next day, they had to meet that reserve requirement. That overnight lending rate was the effective fund rate. But when the liquidity dried up and all of a sudden bank like overnight lending rate shot up to like 10%, the Federal Reserve was like, oh, no way, right? Here, we got the repo facility. You give us those treasuries. We're going to give you a bunch of cash. We'll flip this thing over and over again. And now we have plenty of liquidity happening within the banking system. So things have changed quite a bit, and especially in the supervision mandates of the Federal Reserve and these big banks, in how much liquidity that or capital they are required to have, and then access to liquidity. That's like the bigger one. It doesn't necessarily mean like, oh man, liquidity's drying up, the banks don't have access to it. That's not necessarily the case. They are sitting on what would be close to cash assets, which are part of the requirement of the capital, like the capital requirements of the banking supervision changes that are happening. But then they also have access to the discount window, which is something that up until just recently wasn't a real option for the banks, because any of the banks that used the discount window were considered like, in trouble or something. But that's not the case anymore. So there's easier access to liquidity than, say, was taking place back during September of 2019 that fired off the repo facility. Again, like somebody like Joseph Wang is probably going to understand this a hell of a lot better than I do and could probably break that down and explain it better than I can. But at least that's what I'm seeing from what I'm reading through the FOMC and the documents. Don't get me wrong, there is cause for concern there. I mean, that was what that recent speech, what could possibly go wrong given by, what was it, Barr? Is he the one who did it recently? Yeah. That was an excellent speech because it talks about all the concerns of just that. Like the banks don't have enough capital to meet like any kind of significant stress. And if that was to take place, bam, right? Now we got a major like Lehman Brothers event happening. Bowman, I think, had done the speech earlier that really countered. His speech came out after, so really it was a better speech in my opinion as far as like the entertaining value of it. But it was raising concerns that Bowman had essentially saying we don't have to be concerned about these things. We have now set up the supervision capabilities or requirements in order to make these things function properly. Cantion's essay is on Audible. Yes, it is. Can we go into selective liquidity with negative interest rates? I doubt we're going to be able to have negative interest rates. Right? I mean, I don't think that's a real thing unless you have like cashless society or at least cryptocurrencies or central bank digital currencies, stablecoin, something of that nature. And it has to be prevalent. It has to be existing. Like, I mean, it exists out there, but it has to be existing. Let's use it. Like, where is it at? Right? Once we see it every day, that would be the step to get to negative interest rates. But like, is it something that's going to happen in the future? Yeah, at some point, I guess. But that's not I don't think that's a concern at this moment, at this juncture. You guys having fun? If you're having fun, hit that thumbs up button. Simon, years ago, we were watching for global liquidity crisis that never fully manifested. Are we on track even more so now for having a global liquidity event? Yes, we are. Yes, we are. And that is so good for you to bring up because this is another thing to think about when it comes to like the BRICS nations taking over or something. The global liquidity crisis is when all the nations around the world and all the entities and all the individual corporations and people who have written debts in dollars start finding those debts coming due and not enough dollars to cover the debts. That is going to be a major issue. That's the global liquidity crisis. Now, there's a great document. It's called Dollar Funding Stresses in China, and it's just talking about that specific thing. It does talk about other nations. It's more focused in on China, but it does bring in up the fact that this is happening across the globe, right? That there is dollar funding stresses that take place during times of liquidity strains that just start compounding like you wouldn't believe. And they could literally cause a contagion effect. And this is really where it gets kind of scary for the Federal Reserve. And something that I want to bring up before I even like start describing this is to go back to Ben Bernanke's speech, literally delivered 24 years ago, November of 2002, I guess it's going on 24 years ago, where he talked about this exact thing, the demand for dollars, and what it is that the Federal Reserve is going to do. This is 24 years ago he talked about this. Nowhere can I find anybody ever bringing any of this up, ever. I cannot find it. But this is so telling of what it is that we are about ready to face. Now think about this for just a minute. People would say, oh, well, just let that default. It doesn't have anything to do with us. Screw them. Let it happen, right? Okay, that's cool, and you can have that attitude just fine about it. But what that will do is it will strengthen the dollar. It will strengthen the dollar so much that it will literally destroy our own economy. Whatever exports we do have will essentially become non-existent. We will not export anything because the demand for dollars will be so high, nobody will be willing to send them to us, right? They have to get them for themselves to pay off their own debts. And so when the dollar strengthens so dramatically high that you can't possibly export any of your goods, you're going to start finding deflationary pressures and job losses and major consequences coming from that. The liquidity crisis, the global liquidity crisis, is going to be absolutely devastating to the entire globe, including the United States. Just letting it default will destroy ourselves. We have to provide the liquidity. Now, the Fed has to provide the liquidity. Now, the major problem the Fed has right now with providing the world with this liquidity is what asset do they buy? They have to buy a particular assets. What are those? Generally, it's U.S. Treasury debt. Now, U.S. Treasury debt makes sense. It's the debt of the United States government. They put it on the balance sheet. They issue out U.S. dollars. U.S. dollars comes back to the Federal Reserve, pays off the U.S. Treasury debt. U.S. Treasury is the golden asset, right? Gets used as the safe and liquid asset around the world. It's the closest thing to cash that you can get. So everybody recognizes why the Federal Reserve, well, maybe not everybody, but it makes sense to why it is that the Federal Reserve would want to use or does use or is required essentially to use U.S. Treasury debt to put on their balance sheet as an asset if they are going to issue out a liability of the Federal Reserve note. I don't know how many people know this is how it works, but that's literally how it works. The Federal Reserve puts the treasuries, the asset, could be gold, could be SDR, special drawing rights, could be mortgage-backed securities, but for the most part, it's treasuries. They put these treasuries on one side of the balance sheet. The other side is the liability, because the treasury is the asset, right? That's the government's, debt to the Federal Reserve. So they got to pay it back. When they pay it back, they're going to pay it back in dollars. The dollars are the liability of the Federal Reserve. So what we're using as our asset, like the dollars, is the liability of the Federal Reserve. They're due back to the Fed. That pays off the Treasury. Treasury is then relieved. The Fed doesn't, or the government doesn't own the debt anymore. And this is how the Federal Reserve operates with their balance sheet. So treasuries make sense. The Treasury is a sustainable debt path. The Fed cannot possibly continue down this road. They've said it several times. The U.S. government, is on an unsustainable debt path. They cannot continue down this road. The Fed can inject money into the economy in still other ways. For example, the Fed has the authority to buy foreign government debt as well as domestic government debt. Potentially, this class of asset offers huge scope for the Fed operations. And, as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of U.S. government debt. There's plenty of assets to buy. They can flood the world with liquidity. All they have to do is buy the debt of a foreign nation, because it's several times the stock of that of the United States government debt. So that's concerning, right? All security transactions in the United States to the tune of 3.7 quadrillion. It's huge. All right. With stable coins, we all become treasury holders all the world. Could. All right. Quote for an article we never covered: DTCC, Depository Trust and Clearing Corporation. All right. We should do a video. Uh, oh, here's something else that came up. It was funny because I was messing around with AI. Let me see if I can find it. And it came up with this. Let me see. Oh, here it is. It came up with this acronym. Economics, expectations, credit, opportunity, new productivity, operating profits, markets, incentives, consumer confidence, supply of energy. All right. Isn't that funny? When I had, because I was punching in, using AI to help kind of come up with some of this list, because I thought about, the list of things that we should look at. And then I was thinking, like, how can I enhance this list? And when I was all done, I was just like, what's your review of all this? And that's literally one of the things that it popped off with. Economics, expectations, credit, opportunity, new productivity, operating profits, markets, incentives, consumer confidence, supply of energy. And that's really the list of 10. So if you can think about it in that fashion, right? So funny. Inflation expectations, credit growth, business investment, productivity, corporate profits, labor demand, government incentives, consumer confidence, energy, and financial conditions. That's ultimately the list of things that you would want to look at in order to follow where it is that the Federal Reserve is going to be viewing as far as their inflation expectations would go. If these things are like what you are going to view within those particular segments is going to be very telling. Once you see it and you feel the inflationary pressure either rising or falling, and then you look at the Fed and see whether or not they are moving, it's going to give you a better idea on whether or not the economy is going to be more or less restricted. And again, if that's difficult to understand, just keep following the Uneducated Economist, because this is what we're talking about. We're going to talk about this regularly, and we're going to let you know if the economy is going to be changing in that fashion or the financial conditions, because the Federal Reserve isn't going to be telling you anymore. They're going to go silent, and it's going to be up to some wild, crazy economists giving some bonehead answers. Taking tokenization, stablecoins, crypto, cashless society is closer than you think. Oh, I think it's happening, and I mean, it's obviously being set up. I mean, they got the Genius Act already. The Genius Act. I love that. I don't need to understand why we would need foreigners' debt. Crypto, cashless society is closer. Oh, wait a minute. Foreigners' debt when the primary dealers are obligated by law to buy whatever we need bought. No, that's deplorable. You're misunderstanding the whole idea. I mean, maybe you're not, and maybe you're just purposely doing it. But anyway, um, the idea is that you can require the primary dealers to buy whatever U.S. Treasury debt. The U.S. Treasury is on an unsustainable debt path. So you can require the primary dealers to buy it, but the Federal Reserve isn't required to buy it. Right? Like, you can make all the laws and say, hey, man, you have to buy this debt, and the Fed doesn't necessarily have to buy that debt. Now, they do have to keep the financial system operating in a sense of low inflation, stable prices, and full employment, which in a way means that they're probably going to have to buy that debt, because they are obligated in that fashion. But there's nothing, like, as far as what it is that's happening inside of the requirement of it, I don't think that's necessarily a real thing. I mean, they could buy whatever they want. Obviously, they can already have the authority to buy foreign government debt. So if they don't want to send the United States on an unsustainable debt path, but yet they want to continue to operate in the expansion of the liquidity, what are they going to buy? And there's not a whole lot else. And Ben Bernanke already said it. Well, several times the stock of the U.S. Treasury, we got foreign government debt. I'm addicted to silver. Yeah, and there was a time I was too, but then, I found myself in a position in which that I really needed the silver, and had no vehicle, and I used the silver to get myself a car. I thought to myself, man, what an insurance policy. So, hey, infamous NYC, right on. Buy some BTC. Tabitha is laughing. All right. In what world is this live? Tech stocks. I learned never take your silver fishing with you. Yeah. And, I mean, it really sucks. I mean, especially when you live as close to the water like I do, you think you would just be a little bit more cautious with it. I mean, it's like everybody knows that it's like like, once it's it's gone. Like, there ain't no recovery. It's the river. It's too much tide, too silt, too muddy, too much transferring down there on the bottom. It's gone. And everybody knows it. And man, it's just one slip, boom, right? One little weird toss of the boat, and there it's gone, never to be seen again. Breaks your heart, you know. Hey, UE, at work, night shift. Oh, right on. I'm glad you're listening at work. Says, hey, UK. Tech sucks. I love it. All the laughing faces. All right, do we want to break down anything else? We're out here for an hour and 20 minutes doing the same thing we do every single day, making sure that everybody understands the credible threat theory, the different angles of the credible threat theory, what's taking place today with the credible threat theory, and what it is that we can expect going into the future. Those who have been studying this and watching it, it's going to be very easy to know what it is that's going to be happening with monetary policy. It will not be anything very difficult. However, those who are brand new to the credible threat theory, this is probably going to be hard. It's going to be a bit of a challenge to recognize what it is that's happening out there, considering that they're essentially just going to be very quiet. I think that this is going to add more to the credible threat theory and the power of their words, because people who are, like, think about it. If they are not saying anything, the moment they do say something, how much power that's going to have, right? Like, just like anything else, I should really take like a lesson from this, but if you just, are there babbling all the time, you give it less credit. Yeah. You give it less credit. But if they stop talking and you're wondering what the hell is going on, and then they go to speak for the first time, man, does that not have a profound impact? Huh? Like I said, I should probably take a lesson from that myself to stop making videos for a while. What do you guys think? All right, Colin 6 on the dice. Yeah, I guess that's the only number you can really see there. Was let's see, MU was 35 in 2005 or so. Now it's holy moly, 1,113. When do you guesstimate China will become the economic superpower? They won't. And you know why? You know why they won't become an economic superpower? Like, they're going to become a producing superpower. They'll have a lot of like economic force and effort, but they're not going to become the superpower. You know why? It's because nobody's going to trust them. Nobody's going to trust them. Not so much like have to trust them for any other reason than to pay them back. They're not going to trust them to do it. They'll trust the United States to do it because they didn't have any other choice at the time of the severing of the gold standard. But nobody's going to consciously choose. Like, think about this. Are you going to go and take all your government bonds that you have for your retirement and shift them over to Chinese government debt and say, okay, I'm going to have China pay me back for my retirement and pay me the interest? And I trust China more than anybody else. I mean, no, right? Nobody's going to do that, not willingly. And so when China is going to move into that next stage, they literally have to be an issuer of debt, not the producer of stuff. They want to be a producer of stuff. Remember, a strong economy is built off production and savings. They want to produce things and have a strong economy from the production. Now, that's where the new money comes in. Well, what do we know about new money coming in from production? It raises the middle class. Strong middle class is occurring in China because of the production. Well, once you start raising that middle class, you start raising the standard of living, the production starts finding competition in foreign nations. China's facing this, right? Production's moving out of China to Vietnam, to Mexico, to all these places that are closer to the consumer. Now, this is the problem that China's going to face, is that if they don't maintain that production, keeping that new money coming in, they lose the production to foreign nations, they will fall into pain and misery and poverty. So it's very important for them to continue to be the producer. And they will fight at any level to do this, or else they destroy, or else they're like they have no other choice. They have to do it, or else they'll die. All right. So what is it you think? Like, oh, I guess we'll just roll over and die? No, of course not. They're going to fight. So the problem that they're going to end up fighting for is for the production. So they're not going to fight the United States for that. The United States doesn't produce anything against them, right? Like United States buys their production. So they're not going to fight the United States for the production. They're going to fight other nations for it. But they can't really go and just bomb Vietnam or Mexico or something like that and say, hey, don't build over there. They can't really do it like that. So what they're going to do is set up factories in those nations to the overwhelming capabilities, and overwhelm the capabilities of those nations being able to produce for themselves there. So China will own the production means within those nations. This is where the Silk Road Initiative comes in, right? Or the Belt and Road Initiative. Right? This is where this thing comes in, is so that they can continue to control it in that fashion. So when you look at it in this way, you can say, well, they are taking over the economy in such fashion. Okay, great, true. But not really, because when you think about it in this way, what are they doing this with? Dollars. They're doing it with US dollars. They lend money to these foreign nations to build their infrastructure up, and they do it in dollars. So that means those nations need to come up with dollars. So again, this is strengthening the dollar, right? And so when we look at what it is that China is attempting to do, they're trying to control that production. They're trying to make sure they keep that. They don't want to fight the United States. The United States isn't the producer of these things. In fact, the United States has the currency that they want to use to lend to these other nations so that they can then own the infrastructure. You see how the symbiotic relationship is kind of occurring? They can't explain it that way, but that's what's going on. The BRICS is a total favor to the Federal Reserve. Huh? And again, a lot of people will look at this differently, but this is the way I see it. Because what is it that we already discussed here with the Federal Reserve? They have a problem, and they got to provide all this damn liquidity to the world for all the damn transactions they're doing. That's a very difficult thing to do. Do you think maybe, just maybe, somebody could step up and do some of these transactions? BRICS? Can you do so? Possibly? So that the United States is not the provider of the world's, transactionable liquidity here? Can you please do some of these transactions? It's a favor to the Fed. Oh, so I know it's so counterintuitive to what everybody. Just go and read. The dollar funding stresses in China. It's a Fed document talking about all this stuff. Like, man, what are we going to do to provide the liquidity to the world when we start running into a liquidity crisis again like it happened last time? That's a tough road to be on. This is the Fed trying to figure that part out. They can always buy the debt of a foreign nation. How many other economists? Hit the thumbs up button if this is the first time you're hearing this, or knowing that this is the only place you're going to hear this information. Let's see here. China needs the U.S. so bad. Also, thank you, Simon, for highlighting BRICS was invented by the Fed. I don't know if it was necessarily invented by the Fed, but it's like, to me, it would seem like a brainchild of the Fed. Right? It was just like, hey, BRICS, can you set up something? Right? Something that we don't have to provide all this damn liquidity for? Maybe, just possibly, like a competitive currency that actually can compete, because you can't really introduce a good currency into this, so you got to introduce a bad currency into it and then be competitive against the good currency of the United States. Like, does Gresham Law ring a bell for anybody? Yeah. Alrighty. Tabitha says, and off they couldn't move, refuse. Simon, you read the speech that theorized BRICS. You read the speech that theorized BRICS. Did I? I did? Or is there one? Or should I read one? Is there one? Which one are we talking about? Did I do that? Maybe, I mean, I've read so many speeches now. Maybe there's one I actually missed, and I just like assumed the Fed. Like maybe that is. Maybe I did internalize that. And I just totally thought and thought I imagined it myself. Maybe it was from a speech I read. Isn't that crazy? Very well could be. I don't know. I've read hundreds of thousands, not hundreds of thousands. I've read thousands of documents coming from Fed. You very well could be right on that. BRICS is the response like how Greece had the austerity thing with EU when their debts were out of control. It was 4 years ago. Yes, you did. Well, I'm not going to argue with you, man. You seem pretty confident in that. I guess I just, God, that would be a good one. I got to go back and find it. BRICS has been around for 30 years now, I think. Yeah, and I think like the formation of it was happening like, I mean, I think the idea was happening for a while, but really it was coined, didn't it get coined like sometime around the great financial crisis, in which that like, I forget what was, there was a like a particular economist who was like bringing it up. But ultimately, what it is that's going on there with that BRICS nations, to me, when I see it, it's like the things that I look at as far as what the Federal Reserve is facing and what it is that people are talking about as a threat to the Federal Reserve. And I'm like, that's not. That is not. That is, if anything, that's a benefit to the Feds because they have liquidity injection issues. Right? They're going to send the United States on an unsustainable debt path, and they're trying to figure out a way to deal with global liquidity crisis. The BRICS actually alleviates that problem. Right? And so, no, that's not an issue for the Fed. That's like a benefit. The BRICS talk was the first canary in the coal mine concerning the global liquidity crisis that I learned about on this channel. Thanks. Right on, man. Right on. Simon is quoting the speech he forgot. Huh. I have got to go back and read that, man. Isn't that funny? Did I take credit? Did I just take credit for that understanding? And it was just like it was actually in a Fed speech, and I'm like, I know what the BRICS are gonna do, and actually it was the Fed who actually told me, and I just didn't realize it. All right. Do you think gas prices will fall like a feather or plummet because of the bullwhip effect once the Iran situation gets the all clear? Yeah, I don't know. There's a lot that goes into that. Like I really would like to know more about that particular industry, especially like refining capabilities, how quickly things can be essentially put back into production, like fill production back up to full capacity. See, it was funny because like talking about the lumber industry, it's easy for me to think about. Like I can just see the whole process go down. Like even, the other day we were talking about lumber and we had Madison's Lumber Reporter pop up in the comment section, which I just absolutely loved. I mean, it was so cool to see them join in on that live stream. But something that was brought up was that the mills have plenty of timber stocked in the yards, like ready to be cut and ready to be sawn into boards. And I'm like, well, that's not the issue, though, right? It's not a matter of what it is that we see here. It's a matter of what it is that's taking place within the supply chain, right? Because, like, again, I can't really necessarily relate this to the gas issue, but I can kind of see it happening within other industries. And lumber is, my focus. So, when I look at like the timber industry, you have to fall those trees. Once they're fallen, you have to get them off the hill or else they're going to rot. They got to get to a location. Like they can sit for some time, but if there's no demand for it and those trees are sitting somewhere waiting to get sawed, that means you can't bring more in. So the back up in the hill, the trees stay standing. They don't fall. So if you don't have a continuous falling of trees, then you don't have a continuous supply of trees coming off the hill going to the sorting yards, to the mills. So when these trees stay standing for a significant amount of time, that's a gap in production that's taken place. And that's important, right? That's an important feature of the whole thing, because that's not anything that anybody ever looks at. If those trees stay standing, because like again, you'll have, you got fallers, you got yarders, you got haulers, you got sorting yards, you got mill production, you got transferring of that lumber to another distribution hub, distribution into the wholesalers, out to the retailers. This is a huge process that it goes through. It's bulky, it's heavy, and it has to be continuous. And that's the important part. Every day, trees have to be falling because there has to be a continuous supply. And once those trees stay standing, and they're like, well, no, the mills can just fire up because they have plenty of, it's like, well, yeah, for a moment, but there's a gap in production, and that's going to create an issue. I see gas prices fall for regular, but super is still high, at least here in Cleveland. Yeah, I don't know. I think I'm in Astoria where it's like $5 a gallon. I know other places in the nation it's a lot cheaper. So. All right, school, UE University. Thank you so much for posting that. Yeah, for those who have not yet joined the UE University, it is by far the best place that you're going to get the credible threat theory. I have linked all the speeches, not all of them, but a good fair amount of them with all the highlighted marks to it, so you can go right to those spots, read the speeches for yourself, internalize that information. And I put together a video course talking about how the credible threat theory, or essentially the forward guidance, was developed, why it was developed, and why it was being used. Here it is. It's essentially going to get removed, but that only adds more weight to the credible threat theory and how it is that they are going to be using the expectations of the people in order to conduct monetary policy. And to see how it's being done is really, there's only one place you can find that information, and that's here at the Uneducated Economist, and especially at the UE University. So thank you very much, All Nighter, for posting that link. Getting old. I have heard it takes a while from an expert. Yeah. Alrighty, guys. Are we calling it quits? Hour 36 minutes into this live stream. Should I start cutting back on videos and not make as many videos to strengthen the power of my words like the Federal Reserve is going to do? Maybe that's my issue here on YouTube, is I just oversaturated the content, and now everybody is just completely bored and just expected to be here all the time. Maybe if I remove some of the content and kind of go fishing instead and do my own thing, people will start to value the content a little bit more, and wondering what it is that's going on out there. Deja's like, no, I'll quit too. Oh, Deja and Tabitha, they're like my cheerleaders. No, please don't go. All right, you guys are awesome. I thank you so much for being here all the time. But, really, without the discussion, I don't know what it is that people would do, or, how it is that they would internalize the information. It's a constant conversation about it, and looking at it and hearing it from different angles and different viewpoints, and internalizing it in different ways from, as many different outcomes as possible. This is how we really kind of come up with the ability to have that instinctual, like, it's not even like second guessing ourselves. Like, it's just going to be, how do you put it? Like, you just know what the next right thing is. I think you're addicted to the limelight. Yeah, but I get enough attention all day long in everything that I do that I don't know if I'm necessarily addicted to the limelight as much as it is that I love breaking this stuff down and is having the discussion about it. So, like, I like being on stage. I like entertaining. I like doing that kind of stuff. So, I mean, in a way, I couldn't deny that, saying that I don't like it. But I don't know if that's necessarily what it is. Like, I mean, right now, I could be doing theater. I could be going off and doing auditions for that. And that is super cool. Like, I love doing that theater stuff. The commitment to it is scary as hell, because once you're in it, and you have to like forget everything else out there that you had planned or considered possible for whatever it is you were going to do, and you've dedicated that now to the theater and the outcome of that production. And in that sense, like, I love the idea behind doing it, but again, it's very, it's a lot of commitment. Hey, thank you very much, Reverse People, for the 1999 dudes. Dude, you're an inspiration for real. Please keep it up. Thank you so much, man. I really do appreciate the support. Um, and thank you so much. I mean, I would like to think that the people here who feel inspired by some of the things that I have said and done, and are really just resonating with what it is that they can feel like they can do in their own life. Like, giving up the alcohol and then coming out on YouTube and talking about some of the things that I do. It's not necessarily easy for a lot of people to get out there and share these personal things with them and then be subject to, whatever it is that comes from the viewers in the comment section, the trolls or whatever. But to know that there's people out there who are looking for something like that in their own life, and then to watch the channel and see like me coming out here and doing this, thinking, man, okay, here's a guy who's doing it, came out of the alcohol, trying to figure out on what the next right thing is to do, stepping into what it is that I feel is the appropriate position, and then to say, man, we're doing it during a time in which that people are saying you can't do it. So yeah, there's a lot of people who would resonate with that, right? And want to have something of a similar experience in their own life, and then to be in conversation with other individuals, which there are many of them here on this channel, who are also doing that very thing. Like, people are doing that very same thing in real time right now within the comment section that you were talking with all these people. So once we all together are carrying this energy, you're joining in on a group that is in the process of doing it right here, right now. Like, you can follow those people out there who've already done it, and they can give you a really good idea on what it is that you need to do. But is that the energy of doing it? Right? See, there's some people who want to do it, and so they're always in the energy of wanting to do it. They're thinking of doing it. There are all the possibilities of doing it. Then there's people who are out there who are actually attempting to do it. That's a whole different energy, completely different. Right? The one that says, I wish I could, maybe I'll figure it out in the next video, maybe I'll read another book, maybe it'll happen tomorrow, maybe I'll meet the next person whenever, I'll go to that event and I'll meet those people next year, right? They're always in the waiting for that to happen. And then you got the person who is like, I got to figure out how to get to that event. I got to be there. I got to get to that, and got to, do the next thing in order to make that network happen. There's one who is wishing and then one who is doing. So now when we think about it again, if you are watching one of the elevated individuals out there who has kicked ass and made it happen, that's pretty cool energy to be in. But they're talking about being in that energy. And that's cool if you're, there. But if you're trying to get there, there's a different energy. And that's the process of going through it. They've done it. They're in the process of done it. Talking about doing it. Then there's another energy of actually doing it. Completely. It doesn't look the same. All right? It doesn't look the same at all. Done it, talking about it, doing it, in the energy of it, wishing they were in the energy of it. Which one? All right? And literally, there's no difference between wanting to do it and doing it, other than the fact that you pick up something and make it happen. You send it out there. You can think about it all day long, but then one day you pick up the internet and you say, hey man, I'm reaching out because, right? Sent that ripple of energy out there to the world. May not get a response on that one, but that's the energy of doing. You know? Thank you so much for these super chats. You guys know how to keep me around here. I really appreciate it. Okay, we got this Ellie Phillips. Thank you so much for the $4.99. The amount of insight I have into how I view current events in the world with the credible threat theory has been awesome since watching you. Well, thank you. Thank you very much for this. Thank you for the $4.99, the super chat. I gotta make sure and heart these things. Hold on. Pink. Did I get the other one too? Oh, yeah. Okay. Yeah. Make sure I get all the hearts out there. I really appreciate it. And again, the people say, man, I learned so much from you, but I think it's really the opposite. It's me who's learned it from you, right? From the viewers here, and then us talking about it, and then me sharing it because I'm the voice of it. So people think they're learning it from me, but really it's the channel itself that has grown. And it's the viewers that, essentially built the channel. I mean, again, I might be the host of the channel, but it wasn't like I didn't know what I was doing when I started this thing. We were just taking off and doing it. And the viewers themselves are like, hey, bro, here, check this out. What's this? What's going on? Questions, here, statements, all kinds of things, emails and all. Like, oh, go speak at this event. And I'm like, okay, I'll do it. I don't know what the hell I'm doing, but I'll do it. Right? So I had no intentions, no idea on what it is that's happening. So it really is an organic growth channel from a symbiotic relationship with the viewers and myself. Right? The blind leading the blind, but Simon still reads the Fed minutes, which most hedge funds managers don't and shouldn't. Yeah. How many predatory people are at the events? Predatorial people. None. I've never had anybody approach me in such a way that I felt like I was being like set up to be victimized or something like that. Never and ever. Most of the people that I interact with have questions. They are looking to learn and understand. Most of them are looking to network. They don't have anything other than their own business that they're trying to promote or push. The only people that I ever really had approach me were people who wanted to work for me on my channel, like do thumbnails or edits or something like that. I did have a few of those people kind of approach me, but other than that, the Rebel Capitalist is a very straight up prestigious type of event. It's not a joke. Which was kind of weird because I've had some people tell me they didn't like it, and I was like, man, what could you not like about that? However, Zuber's event is like high family connected energy. It's like it's a different level of experience than the other ones are. The Silver Symposium, when I went to that one, it was very kind of cold and generic. It was good speakers. There was a lot of really good speakers there. Got to meet G. Edward Griffin. Got to have lunch with them, and that was really cool. That whole experience was a lot of fun, but the event itself just seemed a little strange and commercially. It was like, I mean, I guess it was for the Silver Symposium to sell silver stocks and all that other stuff. So, I mean, it was a commercial event. They all are, essentially. They're all there to try and sell something. But the Rebel Capitalist and Zuber's event, like, I think are more in line with helpful, like trying to be actual helpful, useful kind of events. And the Silver Symposium was more like a sales pitch and a show. Right? All right. Thank you, Statistic, for the kind compliment there too. I think V300 is talking about the next game in New York. You help to get people out of the conspiracy victim mindset, seeing the bigger economic picture in another way. Yeah. I'm starting to lose power here, guys. Well, thank you. I appreciate that. Being in the hold on here. Let me just move you. Put you over here. All right. That's another thing. Like, it's I thought about the conspiracy stuff quite a bit because, like, I was at one time I was a big time kind of conspiracy theorist mindset person. Um, and I've gotten to thinking a lot about that. And here's the thing: it's somebody had said to me one time, was like, "Don't you find it helpful that you had gone through that experience of the conspiracy theory mindset?" And I'm thinking, well, yeah, I kind of really did. Because one thing, it gave me a lot of ability to research in not in a good way, but it gave me ability to like research because of some of the things that I was diving into. But also, it was like that resistance, like the building up of resistance against what it is that I really needed to overcome in order to achieve the next level. Because once I kind of gave up the conspiracy theory kind of stuff, it really opened me up to then saying, hey, man, why don't you just start making decisions for yourself and hope that they are appropriate and the right decisions instead of blaming somebody else for the problems that you face. And that's really what got me there, right? So I don't know if I necessarily would have moved to that next level if I had not been the conspiracy theorist first. Right. So it's like it's almost maybe like one of the like for some people it may be the passage that they need to go through in order to get to that next level. But it didn't I know that it wasn't helpful to have the conspiracy theory mindset unless that's what it did for me is actually got me into that next way of thinking, which it very well could have been the case. Yep, it's about taking personal accountability to brighten your future. Absolutely. I mean, what else? Like, if you are successful, are you going to give your like credit of your success to like? I mean, I can understand if you gave it to your mom or your grandma or your dad or something like that, saying, "Hey, I contribute all my success to them. They were so supportive and there for me the entire time." Okay, I could see that, right? But are you going to give like your like the credit of your success to the government? To the conspiracy theorists, conspiratorial mindset out there. Because if you're blaming them for your failure, then wouldn't you have to blame them or credit them for your success? I mean, it's on that same temperature gauge, right? They caused your failure, but they didn't cause your success. That's weird. I mean, don't you think that maybe if you caused your success, that you're also the one who caused your failure? I mean, that would make sense to me that those two would be coordinated, right? If they caused your failure, they caused your success. If you caused your failure, you caused your success. Oh, that's what it is. Yeah. Theories are like jello in the room. There's always room for more. Man, isn't that the truth? Isn't that the truth? Deplorable. Always room for a little more. You want to keep going, guys? Any more questions? Any more comments? Anything you want me to break down? Another speech you want me to read the entirety of? What did Infamous say here? As people fail, oh, we already read this, didn't we? Fail economically, I think less will want to hear this, not more. So many are just into bread and circus. Just look at the New York with the Knicks and the hockey and parade. People refuse to lock in. That's interesting to think about, Infamous. Is as people start to fail, they're not going to want this information. Like if they're succeeding, this information is going to be more in line with what it is that they want to hear. But if they're failing, they want to hear why it is that they're failing. Yeah. Yeah, I can see that being the case because even the success of the channel during the time was like right after, like I was building the channel up and then like COVID kicked in and stimulus checks and all this other stuff was happening. And at that time, although people were feeling a lot of pain from the COVID, it was actually a fairly good experience for a lot of people. Like household wealth was increasing, savings was increasing. There was a lot of like positive things that were taking place, even though the general view was a very negative one, right? So that's pretty interesting to think that while they were doing good, the channel was doing well as within that. As things reversed, I can actually see that. Man, that's that. I'm gonna have to really think on that one, Infamous. That was. Thank you for actually bringing that one up because I never really gave it that angle before. Uh, it's like people who do fitness have said it's pointless advertising to overweight the people who consume said content are fit people. It's a niche by people's desires. Advertising exercising to fat people is pointless. Wow. Advertising this to people who need it the most is pointless. Dang, Infamous. I never really, I mean, that might seem very simple to a lot of people, but man, that, I just like, right? I never thought of it like that. And man, now that I have that awareness to it, that's going to change a lot for me in the way that I view things. COVID was when I started watching because I became interested in economics because of options tradings. Got creamed. Yeah. I hope you weren't following me for investment advice. COVID was the exact time you were recommended. Yeah, I got a lot of attention during COVID. Because they're going to buy the product they need. Anyone I follow for fitness have all said that the people who want their service are always super fit people, not overweight. Yeah. The people who want this information are people who are very aware of the information. They may not necessarily have it in the same theories or mindset or whatever, but they're very much aware of it, and that's why they're listening. If they weren't aware of it, they wouldn't care. You're right. Wow, that's profound stuff, Infamous. I mean, it seems it's so simple when you say it, but it's like I never really thought of it that way. I thought, man, I need to get this out to the people who need it the most, and they're the ones who are going to listen the least. uh, I never drop a yard maintenance flyer off on a dirty yard. Yeah. If you want to maintenance account, you find the cleanest looking yard and put a flyer on the doorstep. So what do you guys think? I mean, this needs to not be marketed for the average everyday working class individual, right? Like I need to market it for the high end elitist or whatever. Man, like I don't want to help those people. What do they need help with? The 20% need it. Isn't that sad? Man, what a bummer kind of epiphany to kind of come across and think about. Learning about the four economic theories and the economic forces that drive things makes sense out of all the chaos. Not everything is an inside job. Man, you're absolutely right. Who is that? Stick sandstone. I totally agree. Like once you learn the four economic forces, everything just starts to clear up and make so much more sense. You stop like everything I read or every article I come across, everything that I think about is really comes back down to one of those four economic forces, that play out. And you can kind of see a combination of them or, all of them playing out at once. And generally, almost always, the articles that you're reading are describing the symptoms of it and never outright actually talking about it. Tabitha, new perspective. Yeah. Chad, it's called capitalism. Yeah, isn't it, Deja? Uh, all right, 2 hours into it. Do we call it quits yet, or we keep going? We got 63 people with 66 likes. It's going to be pretty hard to ask you to hit that like button when we got more people or more likes than we have people watching. I love it when that happens. Um, are we good? Are we all done, guys? There we go. Deplorable. You need to market it for the everyday individual. Start pulling current economic news out out of the media and talk about it daily. Yeah, but I don't want to talk about superficial stuff. And that's what I find like most news articles are is just hyped up trying to get you to, click on their stuff, which is, I mean, I totally get it. But, I don't find any kind of real valuable, useful information out of any of it, and so it's just like I don't want to, I don't want to fill people's heads with uselessness. No, keep going. 420ing. All right. Well, we're going to end up with a lot of dead airspace because I'm running out of things to talk about unless I just start babbling on about a speech or something. So let's call it quits here, guys. I'm just like, it's 9:05. It's getting late, right? It's almost 10 o'clock here on the West Coast, getting on to it, right? 9:05. It's almost 10. uh, I'm going to be in Seattle this weekend at the Seattle Mariners. Yeah, oh God, what am I trying to say? I can't even speak. At the Mariners Red Sox game. So if anybody happens to be there at the Saturday, Sunday, I'm gonna probably be somewhere on the lower level over near the home, right behind home base on Sunday, and then a little bit behind the uh, visitors dugout at the corner. I think we're 3 rows back. So I don't know if anybody happens to see me in the area, wants to come by, shake hands, say hi or whatever. That's cool. I'll be in that particular, kind of area of the place. Um, but it's cool. I can't wait to go. Just finished fishing. Perfect time. Later, guys. Have a good evening. See you, Big Hill. Thanks, Simon. Thanks, everyone. See you all nighter. All righty, guys. Uneducated economist. You let me know.